lot of stories in the media about presale blunders, presale pain, investing in condos over the last handful of years and them coming up for completion, and those condos being worth significantly less than what your contract rate is, and difficulties closing, and people walking away from deposits. A lot of them have occurred in Toronto. A lot of these stories about condo markets and presales are about the Toronto market, but are they happening in Vancouver?
They are. I think our version of it is quite minimal compared to Toronto, but we definitely have some pockets that are hit hard by this.
Definitely.
Yeah. And I think this episode is truly probably stirred by the news that we've been getting over the last few months in the Toronto condo market. And we do see it here, but the stories I'm hearing over there, it's just like tenfold. And over here, I think there's pockets in the valley that are more effective, but in our markets that we work in, it's like Brentwood, North Road. Those are probably the most common. Burnaby did a pretty aggressive job at getting these high density master community plans approved.
Yeah.
And now they're kind of a little bit stale and stagnant. There's not as many cranes in the air. There is construction happening for stuff that was already past that point of no return. But I think Burnaby is probably, to me, the standout victim of the current condo crisis, if you want to call it a victim.
What was the peak of presale madness? Because I remember the Pier West development in New West that launched early 2018, and that was complete madness. It was, they sold at $1,100-ish a foot.
It launched at a time with complete madness when the real estate market, or the resale market, was not in complete madness.
Right. It was kind of after the condo boom in 2017.
But they definitely had the "we'll tell you when to buy, you're lucky if you can buy here" sort of window of time. I mean, boy, was that, I'm so glad we have that power back from developers. I mean, there was a moment in time where we waited out front and first come, first serve. And then it became this moment of time where you get a number and a lottery ticket, and you're lucky if you get to be a buyer in these places. And that's how crazy it got. But yeah, Pier West was 2018, and it was a lineup around the block. And that was, and I think I would say the peak of condo pre-sales, in my opinion, was probably 2017, if I were to kind of guess. But just thinking that the market resale was a little stronger a year before that. Pier West was condo pre-sales had had a lineup around the block for years prior to 2018.
I remember multiple times lining up in lineups where pre-sales started at noon or something like that, and I'd get there at 6 a.m. Or there was at least 2 times I can remember that I paid a friend of mine to sleep in line overnight.
Yeah.
For a pre-sale that launched the next day or whatever.
Ravenwood, Seymour Village.
Ravenwood was one.
Our clients are still appreciative of that.
Yeah. There was another one in Poco that clients wanted a really specific unit in a townhouse complex that was launching the next day. And we had someone go there at 6 p.m. the night before, and they were 10th in line. Yeah, there's 9 other people that got there before them.
Wild. Like a decade ago, the condo pre-sale experience seemed to be like the old Wall Street trading experience that you'd see on TV, where everyone's waving around, "Hey, come here, sales rep, I want to buy a place." Yeah. But it was cutthroat. I can remember some launches in New West where you're just begging to get a sales rep's attention so you could mark down a unit and get one under contract. But it's not there anymore.
Pier West was a great example of that. To me, that was like the peak madness. Maybe it was late 2017, early 2018, but Pier West launched, I think it was January, February 2018. And they had about 650 units in the 2 buildings, and they had 3,500 request forms. 3,500. So it's really just the lottery. And every developer at that time was dealing with these request forms differently, whether it's like a relationship that you had with the sales manager. If you've done deals with the realtors that were involved or the sales team that was involved, you usually had a bit of a leg up. Some of them just did straight lottery. Others did like first come, first served. It was complete madness.
Yeah. And when I first got into this business, pre-sales were priced around the same as resale. And at this time, it felt like a 20-30% premium on top of resale.
Yeah.
I'd call it a 20%, but when you account for GST, maybe a little more.
Yeah.
But we were, Pier West is a unique one because it's a waterfront development that got a lot of attention, but that's just one of many examples. There was countless ones where, people would blindly buy without, just to get in line, just to speculate.
There was a number of years with a track record of pre-sale being a really good investment that in 2 years from now, you could assign the contract and make 10, 15, 20%.
Yeah.
And there was multiple people in lots of projects that were just signing contracts for 3 or 4 or 5 units in a pre-sale with the anticipation to rent them or to assign them. No anticipation of completing on them whatsoever, and just trying to sell in a year or two from now, sell the contract and try to make $100K per unit. And it was a pretty viable investment option for a period of time.
Yeah. The draw for most of the pre-sale buyers was that you buy something today that completes in 3, 4, 5 years. You don't have to be a landlord, and hopefully the market appreciates by the time it completes. The unique thing that I think that's unique to Vancouver's market and probably other parts of the world as well, but I think we've definitely, probably per capita, like it's definitely a way that a lot of people have invested over here. There's a lot of people that I can think of that have bought a pre-sale for investment. Might not obviously be in the business, but I'm sure when you go to other parts of North America or the world, it's not even nothing like what Vancouver is in terms of the pre-sale investor market. Mm-hmm. The funny thing about it is a lot of these pre-sale investors had no intent on really being a landlord, or didn't really want to be a landlord per se. And I say that because a lot of the conversation I'd have with a pre-sale buyer, whether it was 5 years ago or 10, is the project's selling at a premium price. It's probably 20% above resale value. So if you're talking about what is a better investment, buying this pre-sale that you're going to put, yes, a 10% deposit down, or maybe 20 in the peak of it, you still have to be an ability to close. So even if you don't have a mortgage today or tomorrow, you still have to have the ability to close when it completes. So you're still committed to this, like you're a landlord, without just being a landlord, in a way. Whereas if you buy and resell, you're paying 20% less. You're going to get the market appreciation, but you're going to be a landlord tomorrow. And that being a landlord tomorrow just turned off a lot of people. But oftentimes that was the obvious better choice, is if it's strictly an investment, don't pay the 20% premium for new. Buy the luxury existing 20% less.
Yeah.
But not everyone wants to be a landlord right away, Denny. And that's the game of Vancouver. And 20% premium doesn't feel that way when everyone's lined up around the block and 1 out of 10 people get it. Is that really a premium?
So I think the point of this podcast is just kind of update our listeners on what is happening in the condo world in Greater Vancouver. Yeah. Give some specific examples and show maybe some pretty negative examples right now that are happening with new construction that has completed recently, where units are selling for quite a bit less than what they were originally purchased for. But let's start with a positive. I mean, it's not necessarily it's not a positive for Greater Vancouver consumers, but it's a positive for the client of ours. But this was the peak of the madness. 2016, I remember, this is the client of ours that bought a unit, was planning to move into it, life changed, and they assigned it. They bought in 2016 a presale at amazing Brentwood. They paid $929,000. It was an awesome 3-bedroom unit, really good layout, 1,400 square feet, I think, that was on the 57th floor, great views. They paid $929,000. 12 months later in 2017, assigned for $1.45 million. So they made $500,000 in a 12-month period without any monthly costs, no mortgage, no property tax, just from signing a contract and selling that contract. That was, to me, the craziest lift that I saw in the presale environment. We had others that would assign units and make $100K or something like that, but that was the peak of the madness for me that I saw personally in a personal story. I'm sure there was others that were in similar ballparks at that time, but that was the peak of the madness with this crazy assignment world, that this client made a 50% return on the contract price, but from their deposits, which was probably about $200K, they made 250% on that.
It's incredible.
In
it's
12
a
months.
Great investment.
Crazy.
Yeah. And didn't they rent after that too? Or they were happy renters. So, I think, okay, to kind of encompass it, Denny's talking about assignment for profit. There was a window of time.
Yeah.
I think because of those success stories, developers sort of changed their assignment policies over the years after that.
Yeah.
Maybe before we get into just what's selling, what's happening, some specific examples of different developments and what they're doing now, let's just talk about buying new condos. So when you're buying a new pre-sale condo, there is the ability, what are the opportunities? What's the headline today is that condos are not selling. Well, the condo market as a whole is down for new developments. So new developments aren't starting. Existing ones where buyers bought into are completing soon. And a lot of buyers that bought into those ones years ago that are closing soon, the values of those condos aren't what they paid. And the buyers, in some cases, aren't qualified to get a mortgage for their purchase. And so they're trapped in a position where, they bought an investment condo, it's worth less than what they paid. They can't walk away from the deposit without the risk of being sued. So a developer has your deposit, and they can also go after you for damages in addition to the deposit if there are damages incurred. So there is that's the threat that prevents the developer from letting the buyer off the hook. And then the opportunities for the buyers that are in trouble to try to get rid of this investment decision they made years ago is to assign it to another purchaser. But when you assign a contract to purchase and sell for condo, there's not that plain and white. It's not black and white. Oftentimes developers have to approve it. It may be restricted altogether. And I'm finding more resistance to it than encouragement from developers. I think that it's more often not developers not going to allow it. It's more often not developers have existing inventory they want to sell through. And even if they do allow assignment sale, they will take a cut in most cases. But the assignment terms have evolved over the last, say, decade or two. It used to be you could freely assign a contract to purchase and sale, and the developer would accommodate it. And then the developers, people were doing that for a profit. Then developers put in 1%, 2%, 3% of assignment fees, or sometimes restricted it altogether, or said that you can only assign it to an immediate family member. So they did these things to prevent competition from them selling. I mean, ultimately, just prevent their own competition. If they have a 1,000-unit project and they sell out 800 of them, but they have 200 remaining, and a portion of those 800 units they sold out try to resell before it closes, they're creating competition for the remaining 200 units they have to sell. So assignment, if you're buying a pre-sale condo with the intent to assign it before it closes, don't. Just don't, or make sure your assignment terms in that contract are as open as possible. Make sure there's no restrictions on assignment that you don't, you still require the developer to sign off on it and approve it, but rarely are you signing a contract that outlines that as perfectly assignable no matter what. So assignment risk, if you buy a pre-sale, whether it closes in 3, 4, 5 years, plan to close. Are there opportunities in assignments today? I would say there probably are. They are likely hard to find, but they're out there.
They're hard to find because the two most popular terms in those assignment terms now in pre-sale contracts are 1, you can't assign until the development is 100% sold out, and 2, you can't market the assignment. They won't let you put it on MLS. There's some developer contracts that say you can't even market through social media. You basically, our only option as a realtor taking an assignment listing is to email individual realtors and say, this is what I have.
One-on-one available. Communication. Yeah. Just fishing for, hey, I have this.
Yeah. Which make them really challenging. And yes, there are some opportunities that, we get emails fairly regularly from other realtors in Greater Vancouver who have assignments, but they still are, in most cases, above resale prices currently. Yeah. A lot of those contract prices are, 10, 15, 20% above what a resale unit would sell for today. And they're taking off, 10%. So they're still slightly above the resale value. So the challenge of an investor looking at assignment, which was pretty regular 5 years ago, is you're probably paying a slight premium compared to resale. You then are agreeing to pay GST when the purchase closes, and then you're probably still at the completion of that still above resale value.
I think so if pre-sales are selling at $1,300 a foot plus GST, and in the resale market they're selling $1,100 a foot, that 200 foot difference, that's kind of a pretty common gap that we're seeing right now. And I think the question is how much do you have a 200 foot deposit? Or, is the deposit enough? Because I think a typical assignment opportunity right now would be, would a buyer purchase this and take over the original purchaser assigns it to a new buyer. Would that new buyer take the deal if they just take over the original buyer's deposit? Is that a deal? And the deposit might be 10%, 15 or 20%. But I don't know anyone that's assigned a contract of sale and then paid the purchaser to take the contract off their hands. Usually the conversation is, in a market like this, how much of the deposit do I get to keep?
Yeah.
Do I keep any of it?
Yeah.
Do I keep half of it? And in a lot of cases, if the seller of this assignment keeps zero of the deposit, it's above market value, or it's not necessarily a good deal. But it's case by case, and that's very big. But ultimately, the challenge is it's hard to sell assignments when you can't market them. It's even harder to sell assignments when they are 200 a foot more than the resale market, and your deposit doesn't really make it. Even if you forfeit your deposit, it's not a good deal.
Yeah.
Yeah. So let's go into, I don't know, does that sum it up? I mean,
I think that's a pretty good summary. And because assignments are kind of few and far between, my examples are going to be resale. So complexes that have completed fairly recently, and then a lot of units come up in those complexes pretty regularly in new construction, and what those units are selling for compared to their original contract prices. So one specific one I looked at, Brentwood has a ton of new condos, and one of the new developments there is the Concord Brentwood. There was 2 buildings that completed in 2024 there. Currently, there are 77 listings there's 4 towers there now at Concord Brentwood. So there's 77 listings, 32 of which are 1-bedrooms. In the newest phase, their most recent 1-bedroom sale sold for $100,000 less than the original contract price. That is not taking into consideration GST and property transfer tax. So that, and real estate commission. So that person right there is down, losing probably $160K. The last 2-bedroom sale in Concord Brentwood, which was in March, that sold for $145,000 less than the original contract price. That's, again, not taking into consideration GST, property transfer tax, and real estate commission on the sale. So that, that's over.
Do you know
$200K.
roughly what price point you're talking about there? Is that a 1-bed, 2-bed, million, 600?
So the last 1-bedroom sold in the high fives. That was $100,000 less than the original contract price.
Yeah.
And the last 2-bedroom sold at $793,000, I think it was. And that was $145,000 less than the original contract price. The original contract price was like $942 or something.
But after GST, closing cost commission.
Well over 200.
Yeah, right. Yeah. Call it 200. Big hit.
That 1-bedroom was on the 9th floor, and that sold for $1,056 a square foot, where the new contract price, whatever it was 5 years ago when they pre-sold that one, was like over $1,200.
So I had a client buy in Concord Brentwood, and they bought it in 2019 in pre-sale, and it worked out to $1,274 a square foot.
There you go.
And that's that's basically a $700,000, 570 square foot 1-bedroom. So that $1,274 square foot that price was agreed to in contract 6 years ago in 2019, and we're probably trading at, well, you said $1,050 in that one example. That might not have had a parking stall. Maybe it did. Maybe it didn't.
That was the 9th floor unit.
Yeah.
So low in the building, and that sold for $1,056 a square foot. I think your client's was quite a bit higher.
Yeah, 21.
Yeah. So that probably would be more like $1,125 a foot right now.
Yeah. So all in all, like GST considered, give or take 200 a foot down. I mean, the range is 150 to 250 maybe, but there's a bit of a gap. So that's Brentwood. Do you have another example in Brentwood, or?
Yeah. Okay. Gilmore Place. They still have units for sale in their new phases. There's a junior 2-bedroom that is listed right now, pre-sale wise, on the 50th floor for $1,439 a foot. Those are reselling at just less than $1,200 a foot in the ones that have completed. Gilmore Place, 1-bedroom. Yeah. Just sold $1,000 a foot, and they're advertising the pre-sale at $1,439 a foot.
Big gap.
That's a big gap. That's huge.
So we're going to see extreme gaps of 400 a foot difference, but I think like a very like blended gap, I think, is $200 a foot. Like that's just a nice round number. And I guess just to kind of put that in perspective, like say today our mortgage payments are about $500 a month per $100,000 in mortgage. And in this example, you have a $600,000. Let's say someone has a $500,000 mortgage on a small condo. If we go from 4% mortgage world, where say today we're 4.4% to 4.25%, and your monthly payments are around $500 per month, $500 per month per $100,000 mortgage. if we get back to a world where rates come off 1%, or they go down from 500 a month to 400 a month. Like in the past, when rates got very low, they got down to what, 330 per $100,000 a mortgage.
Yeah.
So
Unreal.
So if rates go if rates go down 1%, people on a variable rate are going to get, call it give or take, savings of $60 a month per $100,000 a mortgage. And if your mortgage is $500,000, that's $300 a month of savings. So $300 a month of savings as rates get lower. Do you think that $300 a month savings on people's payments is going to make up the $200 a foot that we need to gain? Because $200 a foot on a $600,000 place is an extra $120,000. That's, in theory, even a savings of 1% is not going to cover the difference that's needed to get back to 1,300 square foot sale prices.
Yeah.
And
I remember at Amazing Brentwood, their newest phase, which I think completes in 2027. In 2021, when they launched the pre-sale for it, when they launched the pre-sale for it, I got one. I got a junior 2-bed. I put my name in just to see what happens. And they called me, and it was $1,420 a foot. And I laughed, and I was like, what? I thought it was going to be like $1,200 a foot. It's $1,420. And I said no, obviously. Today, Amazing Brentwood, their resale stuff is selling for about $1,050 to $1,150 a foot. So when that completes in a year and a half, if markets don't change at all, like there's going to be a lot of people in there that have pre-sale contracts that are $250 a foot over what resale is.
Yeah.
And there's Brentwood's a really good example just because there's so many new towers that launched in this crazy pre-sale environment that we were talking about in 2017, 18, 19, 20. There's a lot of these examples right now, and a lot of people are in a lot of pain taking big losses on this kind of stuff right now.
Fun fact, my first first real estate purchase ever was Brentwood. It was, Tandem. And 2006-ish, I think. Maybe it was 2002 or 3. 1 bedroom for $196,900. And I think it was like a 5 or 10% down. So that's, times have changed.
A little bit, hey?
Yeah.
With now pre-sales at Gilmore Place, for example, a 1 bedroom would start around $700K.
Yeah. And if it's 600, don't get a parking stall.
Yeah.
Do you want to pivot to another area? Do you have anything else to share in Brentwood?
That's basically it for Brentwood. There's, pretty similar story in Port Moody. Port Moody hasn't had a ton of pre-sale projects, but there are a couple launched right now that are struggling to sell. There's one specifically on Clark that is about 30% sold. They've been marketing for 3 or 4 months. There's one, the Inlet District.
I've been getting calls too.
What's going on?
I know. My phone's been going off too.
A realtor's just called me 4 straight times.
I missed 5 calls. Yeah, it's the same realtor. It's I'll let her know we're recording a podcast.
The Inlet District, which is Coronation Park, has launched a couple of towers, and they're selling about $1,200 a foot, where again, as resale for new construction that is completed in the last year is about $1,000. So that's another like 20% increase in that pre-sale speculation.
Yeah. Mind if I highlight a neighborhood here, Denny?
Yeah.
Okay. I'm going to go with Coquitlam North Road, which is also Burnaby as well, on Burnaby East or Coquitlam West. That North Road corridor, it's a whole new area. It's kind of reshaping the Burquitlam to Lougheed Mall. That whole area is loaded with new development. Last 60 days, 36 sales for newer condos built in the last 3 years and 156 listings. So there is stuff moving, but some kind of validates the price per foot that we're talking about. In the last 60 days, the median sale price per foot has been about 1,100 square foot, and median sale price is $695. So you're getting a small 2-bedroom at that price, or maybe a high-end 1-bedroom. that's 1,100 square foot for concrete towers. I had a client buy into a concrete presale for $1,297 a foot for a very small junior one bedroom. So just keep in mind, smaller units trade at a slightly higher price per foot than larger units. So, a 491 square foot unit should trade at a higher price per foot than, say, 1,000 square foot unit. But the 1,300 presale for a 491 square foot junior one bedroom versus 1,100 square foot in resale market out of the 36 sales that happened in the last 60 days. North Road, similar story to Brentwood, but I guess I have a bit of a Brentwood bias. I think North Road is a gem if your life was in the Tri-Cities and you want to be a little closer, and you are a little bit closer to Port Moody for dipping into Port Moody activities. But Brentwood's just been under development for a little longer. It's so central. It seems to get most of the attention when we're talking about Burnaby. We're not getting as many buyers consider North Road as Brentwood. Yeah. And it's really just because Brentwood's like the center of the city. Probably the most convenient place to live. We've both lived there.
We have.
Yeah. We talked a little bit about, I'll go on New West. New West has really 3 developments that are basically encompassing the new condo market right now. One's 618 Carnarvon, the other's Ovation, and the big one is Pier West on the water by Boza. So Pier West, there's a lot of resale units there right now. I think that the big message that I'm seeing, the takeaways I'm getting from the Pier West resale units is that most sellers are walking away from equivalent, Pier West sold in pre-sale, was it 2018?
Yeah.
And the prices that people paid there before GST are around what they're selling for today. So if someone bought a 2-bedroom den facing the water for $1.2 million plus GST in 2018, today it's selling for around $1.2 million all in.
Yeah. It's wild to think that is one of the best scenarios that we're seeing over throughout Greater Vancouver is Pier West, which was craziness in 2018, but they're getting approximately what they paid for their contract in 2018.
I just turned off my phone.
Yeah,
sorry, listeners. We're getting distracted by phone calls here. They're paying what they paid in 2018. One big takeaway, though, from looking at the resale values is lower units. So that when you're buying into a new development, there's always a lift that goes up every floor that you buy.
Yeah.
So every floor higher developers charge more.
Yeah.
And it's a great way for developers to maximize the sellout value of a place because the people that are more price conscious buy the lower units, and then people see sold stickers, and then they start buying whatever's available on the higher end.
Yeah.
The prices that are trading in the resale market, if because of that lift being, call it $5,000, maybe $10,000 a floor, and when it's being sold as a new development, and people see that as, oh yeah, it's up a floor, that's normal. It goes up every floor. When you're in a frenzy, it seems normal. But when you're in real life and you see the finished product, it doesn't really justify it.
Yeah.
When you're, particularly with the Boza Pier West, if you're on the 10th floor or the 30th floor, you still are facing a wall of water in front of you.
Yeah.
You arguably get more water lower down because it's more in your sight line than higher up. And for me, the views on the 20th floor are just as good as the views on the 40th floor. It's just how much of the base of Mount Baker do you want to see? So in the resale market, I don't think there's much of a premium for going much higher. But when you look at what unit, call it a unit on the 17th floor sold for compared to a unit on the 40th floor, or maybe it was like 12th to 40th, the swing in price is about $150,000. So the same floor plan, let's just call it 25 stories higher, might be $125,000 to $150,000 higher. But when you go there in the resale market, it might only feel like it might feel like a $40,000 or $50,000 premium.
Yeah.
So I think when you're thinking long-term, not in every case, every building needs to be analyzed on its own. This Pier West is a luxury waterfront building, primed to maximize every value of every floor. But I think, as a general rule of thumb, consider buying lower on a tower. Don't pay the developer's premium per floor because it doesn't really reflect the resale premium per floor. I think if a developer is trying to get 5,000 more a floor or 10,000 more a floor, the resale market might be 2 or 3. In some cases, it might be more. I know Cole Harbor might go up $100,000 a floor if you're on the water there, but in suburb land, the condo sellers at Pier West that are selling a unit on the 10th floor are probably say they paid $1 million, they might, plus GST, they might be selling in the resale market for $1.05 million. But that same unit, if it was on the 45th floor or 40th floor, they might have paid, call it 1.1 or 1.15, and that one would be say they paid 1.15, that one would be selling for 1.1. So the people that bought lower down in Pure West are taking less of a hit than the people that bought higher up. Yeah. One observation there, Denny. Price per square foot, less than $1,000 a foot in a lot of cases. So just price per foot. These are higher, bigger units facing the water, $1,030 a foot. The 3 bedrooms facing the back tracks around $800 a foot. Concrete construction, new. Developers can't replace that at those prices.
No, absolutely not. Any other stories?
That was New West. 17 sales, 97 listings.
There you go. Yeah. Concord, Brentwood for reference, 13 sales in the last 30 days, 77 listings. So the sales volume, like the sales ratio is not terrible, being at like 17, 18%. Yeah. It's just the ones that are selling are taking a pretty big hit from their contract price a few years back. Would you invest in a presale today?
Probably not.
My answer is the same. My answer is the exact same.
And not just, well, mind you, I have a bias of liking land and houses. Yeah. But I also think that presale prices today are probably going to be the same next year. And I'd rather do it next year than this year. Yeah. So it's not that I wouldn't do it, period. It's just that there's no sign of it taking off right now. So I would just rather wait. Yeah. Yeah. But that being said, certain areas aren't abundant in pre-sales. So like Port Moody, like Pure West, for example, and New West, that was an example of a waterfront building. If you're buying something that's rare, that's whether it's waterfront or a boutique East Van building that in a place you want to be or somewhere in North Van, if it's rare and not readily available, sure. Yeah. But if it's like a commodity, like amazing Brentwood, I don't know. I think I'd wait. Agree. Closing thoughts? $200 a foot difference. No, I think closing thoughts. I think there's opportunity for buying newer condos today. And I think if you're buying, whether it's in the resale market, I think the price you're paying is below the replacement value. So in theory, that to me is a deal. And if you're lucky to find, I think there are opportunities out there that might be hard to find, but in the assignment space, not necessarily saying it's better than resale, but there could be some opportunities out there. So don't shy away, but don't line up around the block for that pre-sale, but don't shy away from looking at new condos, especially if you can qualify for a new one right now. Yeah. I think that's a good takeaway is there's a lot of opportunity in new construction that is completed already, like the Concord Brentwood that's a year old. You're getting a 1-bedroom for just over $1,000 a foot, $1,050 a foot, versus 2 blocks down pre-sale at Gilmore Place is like $1,400 a foot. Yeah. That's it. I think that's it. Yeah. Pre-sale, the world in pre-sales is ever changing, and right now it's not as sexy as it used to be. I don't know how we're going to feel about pre-sale condos at the end of this year, but I imagine got to be better than right now. Not that much, but it's got to, I think we're in the bottom of it right now. Yeah. I think this is the bottom of the condo crisis stories, but I think there's also some people feeling pain, and there's going to be more closings coming up where people will feel pain. Yeah. But I think it's going to be a slow couple of years ahead where there's going to be less starts. Yeah. And so there could be a void in new condos for a period of time. A lot of these stories are pretty bleak. Like what we mentioned, the 2-bedroom purchaser at Concord Brentwood that sold for $145K less than their contract, plus taxes and fees, they're probably down $225. But for some reason, they're not getting the headlines nationally. And I think it's just because Toronto, those numbers look a lot worse. And a lot of people are either walking away from deposits there because the numbers so different, or they're selling for $400 or $500 a foot less. There was a lot of those pre-sale developments in Toronto at the peak that were selling for $1,600, $1,700 a foot that are now worth $1,100. And so our $150, $200 a foot reduction in prices over the last few years doesn't look as negative as Toronto does, for sure. No, I don't think so. And I think for markets, say outside of Burnaby, East Van, North Van, a lot of markets aren't flooded with new developments. Yeah. So, if you get a good opportunity for a new condo, it might be the best deal you're going to see for the next few years. Yeah. And I hope you got some takeaways for the new condo market crisis, if we call it a crisis in Vancouver. Thanks for listening. Thanks for tuning in. Thanks for sticking with us this long.